morning. Welcome to IG's early morning call. It's great to be back. It's Tuesday, the 12th of December. Let's take a look at the headlines as we wait the start of today's European session. And after those record highs we've seen on the German DAX and the French CAC 40, we continue to see rises across the European equity markets. But the focus today very much on what's happening on the currency markets as you wait today's US CPI data. We've got the Fed meeting starting today on a two-day meeting with a conclusion tomorrow. And then we've got the European Central Bank and the Bank of England on Thursday. So a lot for the currency markets to consider as we see a continuation of the build-up towards the big news, possibly the last big news really of the year to date. Talk about big news, we've seen some UK jobs data out this morning. The unemployment rate has remained at 4.2%, but wages up 7.3%. The Bank of England cannot seriously consider its job is done if we see a continuation in wages, as we are at the moment. If we see wages rise at the rate that they're rising at the moment, that means that the Bank of England has seriously to consider that its job on inflation is yet to be done. Let's take a look as well at what's happening in terms of some of the corporate news out today. There's not much around, but we saw some all sessions activity on the IG platform late last night with a drop of around about 7% for the shares of the software company Oracle. Its cloud business suffering from weak enterprise spending, sending its shares down on the IG platform. Let's take a look at what's been happening on volatility, where we see a continuation of this bump along the bottom. Yesterday, we saw an intraday trade knocking on the door of the lows that we've seen not in 5 years, that we saw a couple of weeks ago on the volatility markets, and we see a continuation of this down here. And as a result of that, fairly confident that we got a gain in the bag across the European markets at the start of today's trade, indeed the US as well. The big wild volatility coming yesterday. We saw a big pushback on from the lows we saw in the London markets yesterday, closing up off the lows, but nonetheless down on the 24-hour trading day. 24-hour trading looking strong as we go into the start of today's European session, as we see a rise once again back up above the 200-day moving average. German DAX, new record highs. We're off the highs at the moment at 16,825 on the 24-hour markets, but looking for a slightly stronger start at the beginning of today's session as well. French markets, same sort of thing as we wait the European Central Bank interest rate decision in a couple of days' time. The French market's not too far away now from this red line, which is the all-time record high at 75.87.5. 75.76, so we are now within 10 points, around about 10 points of that record high on the French CAC 40 there as well. Let's take a look at what's been happening across the Asia-Pacific markets in the trading day on the session. Closing out the trading day today on the Japanese markets, up 1/7 of 1% for the Nikkei 225, despite the fact we've seen commentary today coming through from one central bank member talking about interest rates, saying there's no real need to raise rates up off the lows that we've seen, the record lows that we've seen. There have been some speculation that the December meeting this week might bring about some inclination for the central bank to raise interest rates and start to restrict monetary policy, but none of it. Nikkei 225 managing to eke out a gain of 1/7 of 1%. Gains as well across the Hang Seng stock index of almost 1.2% as of the last time we looked. That cash trading day continues. S&P ASX up 0.5%. Let's take a look at what happened as we saw the trade late yesterday on Wall Street ahead of those numbers out from Oracle, which we'll take a look at in just a minute. Gains across the board for all the major markets in the States as of yesterday's close. The Dow making the most of the money that's been available in the market. And if we look at the shape of the trading pattern, these gains that we've seen recently, we are now, at 36,426 as of the intraday highs yesterday, the highest point we've been in these markets since January 2022. So money continues to go into these markets as a part of it, saying that there is no other place in the markets at the moment for money to go. There is a wild expectation that today's inflation data out in the States will continue to allow the Fed more latitude in its attitude towards interest rates, and that is that there'll be no interest rate rise coming tomorrow, and it's not expected we'll see any rise now. It's just a question of when the next move comes in rates, which is widely expected now to be down, possibly could well be May next year. So that's the shape of the Dow. S&P 500, same sort of thing, this push higher that we've got, breaking this line of resistance of 46.07 in the last couple of days, 46.24, and we're continuing to punch higher in the 24-hour markets, and we continue to trade at levels not seen since the 28th of March 2022. The Tech 100, Big gains in yesterday's session overall in the 24-hour markets, despite the fact we've got Oracle. ORCL is the ticker, which means it's a NASDAQ-traded stock. It's a 4-digit ticker, which gives it a NASDAQ listing. 16,250, the NASDAQ continues to push higher. And we're now there at levels not seen, since January 2022. This dotted line up here, the red line, is at 16,769, which is the record highs we saw intraday in the NASDAQ back on the middle of November 2021. Let's take a look at what's happening outside of the equity markets. So I want to show you a chart on the Aussie in just a moment's time, but let's take a look at what's been happening overnight on the data out, because we've got a rise in consumer confidence for the Westpac consumer confidence number in the Australian economy, rising to 82.1 in December, with pessimists, though, still greatly outnumbering optimists. Anything below 100, the neutral mark. It's the longest streak since the early 1990s. We've been below that line, and anything below 100 means that the pessimists outnumber optimists. 2023 will be remembered, I think, as the second worst calendar year for sentiment on record, dating back to 1974. That's assuming the next number that we get will continue to seal that for the end of the year. But in fact, this, technically speaking, is a December number, despite the fact we still have 2 or 3 weeks to go until the end of the year. So broadly speaking, it's the second worst calendar year for sentiment on the consumer side on records dating back to 1974. Australian NAB business confidence, National Australia Bank, it comes out at the same time as the consumer confidence number, falling to a -9 in November from a -3 in the month of October. Let's look at what's happening here on the Aussie dollar. 65.95, bouncing off recent lows, the Aussie up against the US currency. Now, jobs here in the UK. We've seen the unemployment rate remain at the recent level of 4.2% in the month of October. British wages, excluding bonuses, rose by 7.3% in the 3 months through to the end of October, compared with the same period this time last year. Now, economists had forecast a 7.4% rise in these figures published by the Office for National Statistics, but anything above the CPI rate, which is well above that most recent reading, means that there's continued pressure on the Bank of England to raise interest rates. The Bank of England really concerned that pay growth in Britain is far too hot for it to bring inflation down to its 2% target. Let's take a look at the 5-minute chart for sterling against the US dollar. It is actually down. Now you can see 5-minute candles. This wild candle that we've got here was the release of that data this morning. We saw an immediate rise in sterling, but since then a pullback. What's it mean for the Bank of England? Well, it'll certainly be very interesting to see what happens when the BOE comes through with its interest rate decision on Thursday. This is sterling down against the euro. We're currently trading at 11666 for sterling against the euro. Just a quick update on where we are in terms of the daily chart, just to confirm that sterling holding on to some of the recent gains. But the big thing at the moment for the Bank of England is this worry that we could well end up getting some sort of wage price spiral. And if that occurs, then we could well end up seeing the Bank of England having to raise interest rates again. It's not the base case at the moment. We're not expecting an interest rate rise this week. I just want to return to what's happening with sterling against the US dollar, because I think this is where the key battleground will be, doubtless, when we see the Bank of England come through with an interest rate decision tomorrow, because interest rates are really all about what happens in the broad scheme of things against what the Fed is likely to do. The Fed's not expected to move, and in fact the Fed's expected now to indicate the possibility that the next move in interest rates might be down. We've got sterling trading at 125.72 against the US dollar, ahead of the Fed decision on interest rates tomorrow and the Bank of England on Thursday. Now, if you're long on this going in to these decisions, your stop goes underneath the 200-day moving average at around about the 124.75 level, 124 and 3/4 level, currently trading 125.74. This is the high up here at 127.40, but we've got the highs we saw back on the 29th of November, and that would be your price target if you're long on this. If you're short on this, your stop clearly goes above this area up here at 127.50. With a view to taking it lower. It all depends on what the Federal Reserve and the Bank of England say over the next 72 hours or so on their interest rate decisions. Now, later on this morning in Germany, we get some key economic data coming through from the ZEW Institute. The economic sentiment is expected there to fall to 8.8 in December from 9.8 in the previous month. But let's remember that November, the November survey rose back in positive mode after 6 months below flat, which means that out of the 350 analysts and other financial experts, majority, although very tenuous, are now bullish on the German economy. And that could well be significant for what we were seeing earlier today with this rise in the German DAX up to a new record high. Quickly refer once again back to this DAX index because this could well be where we see some of the gains if we see a positive number swing come through on the ZEW at 9 o'clock this morning, watching out potentially for further upside in the DAX should we get a very hawkish number coming through or bullish number from the ZEW. But the main event today will doubtless be the US CPI data out at 1:30 p.m. today, UK time. Consumer prices expected in the States to rise by 3.1% in November year on year, one notch lower than in October. Core CPI growth expected to remain at 4%. Now, for this, we'll be very much watching what's happening with the euro-dollar trade. And the euro-dollar is at the moment gaining, euro gaining against the US dollar at 107.77. This is going to be the last piece of data that Jerome Powell and the Fed board members will have to digest before the Fed decision on Wednesday. Fed funds target rate is widely expected to remain at 5.25% to 5.5%. for the third consecutive time. The market's now looking for clues on how soon the Fed will start cutting rates. Currently, the CME FedWatch tool forecasts a 90% chance for a Fed rate cut by May 2024, with a 60% possibility of a cut in the March meeting. Goldman Sachs has rather a dissonant voice when it comes to the Fed projected path. Said yesterday it sees the US central bank cutting its rates in the third quarter next year. Previously, it expected such a move to happen sometime in the fourth quarter of the year. So that's something I think it's certainly worth looking at in terms of the outlook for US interest rates. Now, it may be quiet on the corporate front on this Tuesday, the 12th of December, but Rolls-Royce has been catching up on the markets and catching a lot of attention of investors, certainly at the start of this week. Let's take a look at the chart because you can see quite clearly here, as of yesterday's close, we were just below the £3 level. We've gained 219.8% so far this year. It was one of the top rises on the FTSE 100 yesterday after Citi increased its price target for the engineering company. It raised its target to 431 pence from 294 pence, also lifted its EPS forecast by 27% in the near term and 52% in the long term, driven by strong cash generation. Now, 430 pence is way up here. And you can see if you look back on this chart, if I bring in a long-term chart for Rolls-Royce, that 431 pence, we haven't seen on this chart. You've got to go all the way back to levels not seen since March 2020. Now, all this comes after UBS and Deutsche Bank analysts increased their outlook on the stock and their share price target to 400 pence on Friday after upgrades by JP Morgan last week as well. Rolls-Royce also showcased on Monday a mock-up of its space micro-reactor concept model. The small advanced reactor is scheduled for a demonstration on the moon early next decade and is designed to provide future bases with the power needed to survive the cold lunar night. To date, Rolls-Royce share price, as I said, gaining overall by a margin of around about 220%. Oracle shares dropped by as much as 7.8% in extended trade late last night. Sticky inflation and high borrowing costs have forced companies to cut back on expenditure, raising concerns over demand for its cloud offerings. Oracle forecasts total revenue growth to be in the range of around about 6 to 8%, below analyst average estimates for growth around about 7.6%. I think we've got a chart here showing you some of the moves that we saw late last night in terms of the earnings that we got from the company. In its fourth quarter, Oracle adjusted earnings of $1.34 per share, marginally beating estimates. Second quarter revenue rising 4% to $12.94 billion, below estimates of around about $13.05 billion. Excluding Cerner, the healthcare business Oracle acquired last year, revenue rose 6%. Now, if we look at what's been happening with the share price chart, this is an all sessions stock on the IG platform, you can clearly see here the big declines that we saw late in the trading day last night after the close of the cash session. We're certainly expecting a drop at the beginning of today's trade when the trading day gets underway later on Wall Street. We've got a margin here of 7.6% as of the close in extended trade late last night. In 2023 overall, the stock has gained around about 27%. So it's been a positive year, and as indeed it has for some of these big tech stocks. But Larry Ellison had a really difficult evening last night with some big declines as of the close. As I said, it's quite quiet in terms of some of the corporate news out today, but just two stocks to watch, RollsRoyce and also Oracle. I want to bring up a share price chart or security price chart of gold, because we've seen this big rise, and since I was off in the last week or so, we've seen this breakout price target of 2090 easily beaten. Hopefully you rode that positivity with me on these markets. I was taken out when we saw a beat at that 2090 level, but we went on to continue to a new record high at 2121. Just to quickly recap as to what's happened since that high we saw back on Monday the 4th of December, a fairly serious pullback. But the interesting thing is we have seen a pullback down to this interesting line of support on my fib here at the 76.4%, 1976 level here, which was hit yesterday. We bounced off that. We've got a little bit of positivity. I'm not yet long in this, but you can see in the longer term, this is still nonetheless a positive story. And much has got to play out really what happens with the dollar. If we do see a weaker dollar in the days ahead for a number of different reasons, not least of which is the Fed, I think we could well see a continuation of this rise once again in the price of gold. That being said, we've got MACD on the way down, indicating potentially that people are looking now for reasons to sell this. But I think fundamentally, there's a good reason for this market to rise again should we see a slightly weaker US dollar coming out of what we've seen recently in terms of some of the moves on the foreign exchange markets. Now, let's take a look at what's happening with this price here of oil, because as of the low point we saw back in Thursday last week, where we saw something like around about 5-6 month lows for the price of Brent and WTI, we've seen a bounce back. And we've got a rise here at 76.65 on the price of oil. That is it. We're back at 10:30 with Charting the Markets. Do join us for that as we take a look in some more detail at some of the technical analysis around some of these big moves. Certainly expecting another record start at the beginning of today's German session on the DAX.